Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle Roque with Brad Koima of Koima Varlick. We have grains all lowered this morning, livestock futures to the plus side. And Brad, thanks for being with me. Let's talk about this cattle market. We're seeing a big rally this morning as we got some news late yesterday, even last night, about New World screwworm getting closer to the U.S. border, right?
Correct. I don't think we'd be having this kind of a trade today without that news. So that's a good place to start. Thanks for having me on, Michelle. Apparently, as the story goes, released by the USDA, that there was a 8-month-old, 600-pound-ish calf that started in way southern Mexico in an area known to be infected with New World screwworm, and was brought up to a feed yard a little less than 70 miles from the Texas border. Sounds like a brilliant move. Anyway, it tested positive, and I think, piggyback that story with a story earlier on the weekend that Ivermectin had been approved as a injectable use for treating the screwworm. And, when I first heard the Ivermectin news, I thought there has to be some protocol for taking care of this stuff, whether it's dipping them or injecting them or something. And so I thought, well, this is probably their first step of saying, okay, well, we know this will work. And so if we do this protocol, then someday it'll be safe to reopen the border. But yeah, this changes that again. I'm sure 70 miles is pretty close, and it makes you almost feel like it's not really if it's going to, but when it's going to. I shouldn't say that. I don't know. Hopefully they keep it over there, but you're getting close enough now that I keep wondering, what do they do about wild animals? But maybe they can keep it there. I hope so. At least let's figure out how to treat it. I mean, this is not mad cow disease. It's something else altogether. But so that's, I think, the stimulus here today. And then you're getting some, obviously some big time technical buying, because, the stuff that we had gotten to where we were, broke some up trend lines, took out the 20-day moving average, flirted with taking out the 40-day moving average with some of the stuff here. We're well above all of that bad stuff now. So I'm sure you're getting some fun buying and some regular, buying here from anybody that follows a technical system.
Right. And we did have a higher weekly close last week, so that was good to see as well, kind of push us technically. But if we can close above these levels, that would be positive. Cattle on feed report, you say largely neutral, though.
Right. I thought it was, the placement number 1% less, a little friendly. The marketing number 1% more, which is a little negative. Back in the old days, the marketing number used to be the biggest number we felt was most important. But anymore with the border closing and all the sensitivity to the lack of placements, it seems like we spent more time on the placement number. I didn't see anything especially interesting about the weight breakdowns. Or no real surprises in terms of what Texas did. The one thing that was a little bit interesting to me was the Iowa placements. I believe 16% below a year ago.
Yeah, explain that to me.
I'll try. And I'll start with, you have to have an empty pen to be able to place cattle. Iowa is an anomaly, I believe. I'm in Northwest Iowa, where most of the cattle in Iowa are fed. We have no shortage of cattle here. Pens are full. And if to be able to place cattle, you have to have an empty pen, right? August would traditionally be the month where we place our yearlings. And so that kind of came and went. And we placed a few, of course. But I think the issue is that there's cattle up here. And I'm not saying it's unusual. I'm not saying it's oh my gosh, the trend changing news at all. But the reality is that there is some cattle up in Northeast Nebraska and Iowa. And that is, in comparison to where Texas is, 11 months in a row now of record low placements. So we do have a few up in the north, and I think that's the reason why.
The last time, though, we had placements down 10% and marketing's down this much was 2015. And so you guys think that we're seeing a little bit of heifer retention?
Yes, I sure do. We do here. And I mean, at some point, the common sense part of your brain goes like, well, I mean, used to be that greed and fear, both were characteristics that the market could always depend on, right? Um, and I say that kind of tongue in cheek, but I mean, clearly the producer should be incentivized here to probably save a few heifers. If he isn't incentivized by having record cow kill the 2 years prior to this for 2 straight years, knowing that he has to at some point rebuild the herd, I would think economics would certainly tempt him into saying, well, maybe I better try to get back to where I used to be with my cow herd by saving some heifers. So I think that that's part of it. The other thing I think that, and what am I going to talk about today when live cattle are up $3.50 and feeder cattle are up $7? But the thing that I can show you my scar. Okay, 2015 and 16. We actually had less cattle in 15 than we did in 2014, and the market sold off from May until basically until December of 16. Sometimes the market will get its own head. Okay, and sometimes there's more to the market than just supply. So I think it's interesting and curious that we're comparing comparative numbers to 2015, which was not a good year to feed cattle and around. So I still think, let's be a little bit smart and be a little bit careful.
Right. And we know the rebuild is not coming as fast as it did in 15, at least.
Not even close to what we did then, Michelle.
Yes, for sure. Okay, so this big move in the futures, Brad, does that help push the cash higher this week, do you think?
We done the show at 7:30 this morning. I'd have said, honestly, I think I'd have said steady week. My expectation would have been on cash cattle. We felt like we kind of limped into a 227, which honestly was better than I thought last week, Monday. I was afraid we might be a little lower again. Once it starts to, take $2, $3, $4, $5 off, it seems like that seems to be the way it goes. So I guess it was harder to get 227 by Friday than it was on Thursday. So it felt to me like we finished kind of steady, weakish. The South was 240. So now they're premium the North. But with this big up, who's kidding who? I don't think any feedlot's going to say, be anxious to stake less money. So futures stay higher to the end of the week. Maybe I'll have to amend that steady lower to thinking maybe we could be a little bit better. Again, the show lists are a little bit bigger in the North. And we feel like maybe we're not way backlogged, but we're not pulled ahead either like we had been for several months up here. So I think we'll have some cattle for sale here, especially in the North.
If you get higher cash, can you go back and retest the highs on the futures?
Sure looks like it. I mean, I thought maybe it was over when we took out the 20-day and took out the 40-day last week. Looks like I'm probably wrong. We have not taken out the highs here yet, but I mean, from a technical standpoint, we're still discounted to the cash. Not very much though. October cattle at 236.30 right now while we're visiting. So I think there's a shot we take a retest of the highs, I guess by inclination because of the calendar maybe and because of the weakness in the beef market. I would say maybe that would be about it. And then we see the market pull back out down into Thanksgiving, but this is impressive action today for sure.
For sure. All right, hogs made new contract highs, I think, in some months on Tuesday, consolidated kind of for the rest of the week under those levels. But let's talk about if cattle are going higher, do the hogs follow, or do we get held back by these rising weights and slaughter numbers?
It seems like the hog cattle spread, if you would, has less to do with each other than it did in the old days.
Okay.
I have to, trading hogs trading hogs at all is a challenge for me anyway, as are all the markets. But, to me, the fundamentals, last week's kill was bigger than a year ago for the first time in, I don't know when, a long time ago. Average weights are more than 3 pounds over a year ago. So, I mean, there's no shortage here. And unless you have perfect demand, you're going to struggle with that kind of supply, it seems to me. I think that there's more hogs in the first quarter of next year than there is right now. I think most analysts would agree with that, So, I look at that first quarter and go like, boy, I don't know. Why not reward this big rally that we've had? Feb hogs up here against 90 to 91 cents. So, old guy fundamentalist, it looks to me like we've got a little bit backlogged and we got plenty of them around, and I don't see China anywhere buying anything. So, I'd proceed with caution.
And speaking of China, certainly some disappointment on Friday's talks between President Trump and Xi, but are we still trading that in the beans this morning, or are we trading Argentina getting rid of their export tax until October 31st?
Well, I think probably a little bit of both, and I think it's well said that you mentioned Brazil first. I think yes, there's some hangover problem here. That all this big hoopla and nothing, not even a word about China. You know, I guess this is not very analytical, but in my own feeling here, transitioning to this China talk about pork, they haven't bought pork for us from a while, and I think it's because their herd rebuild and their herd health is much better than it was. I don't think they need to buy pork from us, but if they've got that many hogs around, they do need to buy feed. So I don't know. At some point, I kind of think China will come back, but then today we got this piggyback deal where Argentina, while they're not the great big supplier like U.S. or Brazil, is they're significant enough to make a difference, at least obviously today. So it looks like they're trying to make themselves very competitive in terms of the world market on what they can get for their beans. So got a lot. They put the beans in a bad spot technically here. I mean, we had been holding much better than the corn and the wheat. Now all of a sudden we broke out of that sideways pattern, and it doesn't look like there's much between here and testing those contract lows, which is another 25 or 30 cents ish away, 25 ish away. Corn. I could talk myself into buying corn just because I don't think the crop is big as the USDA thinks it is. Okay, that's the farmer in me. But with wheat so poor and the beans so poor, I don't know. There's maybe not a rush to run at the corn market either. But I do think, not knowing how long it takes the USDA to catch up to it, I think that what they've started to do with lowering this guess on the yield is going to continue until they get it down to some place that's, I don't know, under 180 in my opinion. If I had to believe what I'm hearing from early yield guesses around here at least.
Yeah, we're hearing the same, but it's hard to go up in corn when soybeans are going down for sure. All right. Thanks so much. Brad Koima with Koima Farlake. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.